Welcome to Hidden Finance, the channel where economics and finance reveal their most hidden secrets. Today, we'll uncover a new mystery that has shaped global markets and influenced the economy. George Soros is a name that sparks extreme reactions. For some, he's a financial genius, a visionary philanthropist who has donated billions to support democratic causes around the globe. For others, he's a ruthless speculator, a shark who preys on vulnerable economies, or even the architect of global conspiracies. Whether admired or despised, one thing is clear. Soros has left an indelible mark on the world. As of 2023, he has amassed a fortune of nearly $7 billion. But who is the real George Soros? Is he truly the villain that many portray him to be? Or is there more to his story? Today, we're diving into the life of George Soros, one of the most controversial and talked about investors of all time. George Soros was born in Budapest, Hungary in 1930 into a Jewish family. But here's the first twist. George Soros wasn't his birth name. His parents named him György Schwartz. At that time, however, anti-Semitism was rife in Hungary, and Jews were often targets of discrimination. To protect themselves, his family changed their surname to Soros and used false documents to pose as Christians. Young György survived the Nazi occupation of Hungary thanks to his father's connections. After World War II, when the Soviets took control of Hungary, 17-year-old Soros fled to England. He barely spoke English, but managed to enroll at the prestigious London School of Economics, LSE, one of the top universities in the UK and Europe. Initially, he studied philosophy, and during his final year, he studied under none other than the renowned philosopher Karl Popper. Popper's concept of the open society, a society that allows for free thought and the flourishing of new ideas, greatly influenced Soros. Popper taught that whenever a theory seems like the only possible explanation, it's a sign that neither the theory nor the problem it addresses has been fully understood. These ideas left a deep imprint on Soros, who earned his master's degree in philosophy in 1954. However, needing to support himself, Soros turned to finance, a field far removed from his philosophical studies. Desperate for a job, Soros reportedly wrote to every single bank director in London. He received just one response, from the small bank Singer and Friedlander, which hired him as a lowly clerk. Despite starting at the bottom, Soros quickly distinguished himself with his sharp mind, particularly in the area of arbitrage. Now, before your eyes glaze over, let's break down what arbitrage is. Imagine you buy a rare pair of sneakers at a flea market for $100, knowing that on a specialized website, the same sneakers sell for $300. You list them on the site for $280, paying a $10 fee. Once sold, you've made a profit of $170. This, in essence, is arbitrage, profiting from price differences across different markets with minimal risk. In reality, arbitrage can be much more complex, especially in financial markets. But the core idea is the same. Identify inefficiencies between markets and exploit them before others catch on, and the price gap closes. Soros excelled at this, and his expertise grew rapidly. By 1956, he had moved to New York to work in a brokerage firm, then as a market analyst, and eventually, in 1963, he was promoted to vice president at the bank Arnold and S. Bleichroeder. But despite his success, Soros remained unsatisfied. He continued to devote part of his time to philosophy, which led him to develop the theory of reflexivity, a theory that would become the cornerstone of his investment strategy. Reflexivity suggests that markets are not always rational. Investors make decisions based on their perceptions of reality, which are often influenced by biases. This concept, while widely accepted today, was revolutionary at the time. Soros believed that to accurately predict market movements, one must account for these irrationalities. He applied this theory not only to his arbitrage strategies, but across his entire investment career. After 15 years in the finance industry, Soros was ready to make his big move. In 1966, Soros was granted the opportunity to manage the first Eagle Fund, an investment fund with $100,000 of the bank's money, equivalent to about $1 million today. The fund performed well under his management, leading the bank's president, Arnold, to enter into a partnership with Soros. Together, they launched the Double Eagle Fund in 1969, a hedge fund with an initial capital of $4 million, equivalent to over $37 million today. Soros personally invested $250,000 of his own money, a significant sum at the time. The fund's success was undeniable, and in 1970, Soros decided it was time to strike out on his own. He founded Soros Fund Management, a legendary investment firm. 3 years later, he left his job at the bank and, along with his partner Jim Rogers, launched the Quantum Fund with an initial capital of $12 million. The fund's performance was spectacular. By 1979, it had grown to $100 million, and by 1981, it had reached $400 million. Soros's personal wealth also skyrocketed to $100 million, a significant achievement for a self-made man in his early 50s. Yet Soros felt that he had not yet proven himself. It was only the beginning. In 1979, Soros created the Open Society Foundation, a philanthropic organization dedicated to promoting democracy and human rights in repressive regimes, starting with countries like South Africa and Soviet-occupied Poland. However, Soros didn't leave the world of finance. In the 1980s, he gained fame as the short-selling wizard. For those unfamiliar, short selling is a technique used to profit from falling prices. It involves borrowing a stock, selling it at the current market price, waiting for the price to drop, and then buying it back at a lower price to return it to the lender. Short selling is risky. In a typical stock purchase, the worst-case scenario is losing your initial investment if the stock price drops to zero. But with short selling, losses are potentially unlimited because there's no limit to how high a stock's price can rise. Soros, however, was fearless and highly skilled in this area. He understood that his reputation alone could influence the market. Once others saw him shorting a stock or currency, they would often follow suit, amplifying the downward pressure. Soros became globally infamous in 1992 as the man who broke the Bank of England. In a well-timed attack on the British pound, Soros bet heavily against the currency, leading to a massive devaluation that forced the UK government to withdraw the pound from the European Exchange Rate Mechanism, ERM. This move reportedly earned Soros over $1 billion in profit. He didn't stop there. He identified similar vulnerabilities in the Italian lira and exploited them as well, causing the lira to devalue by 30%. This event had severe repercussions for Italy, including a forced exit from the ERM and subsequent economic instability. Critics argue that Soros's actions exacerbated these crises, although he maintained that he merely highlighted existing flaws in government policies. He claimed that by anticipating and reacting to inevitable devaluations, he actually mitigated the damage that would have occurred later. Soros's reputation as a financial predator was solidified after these events. However, his controversial activities didn't end there. In 1988, Soros was embroiled in an insider trading scandal in France. He learned from a friend about a group planning to acquire shares in Société Générale, a major French bank. Although he declined to participate in the takeover, Soros bought shares in the bank, which he later sold for a $2 million profit. In 2006, he was convicted of insider trading by the French Supreme Court. During the 1990s, Soros's Quantum Fund operated from offshore tax havens like the Netherlands Antilles and the Cayman Islands, raising eyebrows over his avoidance of U.S. taxes. Although this was legal, it added to his reputation as a financial maverick willing to push ethical boundaries. Soros didn't just limit his short selling to currencies like the British pound and Italian lira. Over the years, he also shorted the US dollar, the Finnish marka, the Thai baht, the Malaysian ringgit, the Japanese yen, and the Russian ruble. While these moves earned him enormous profits, they also made him a target of public ire in various countries. Yet, Soros's bets didn't always pay off. In 1987, the Quantum Fund lost $600 million after Soros wrongly predicted that Japanese stocks would be hardest hit by a global market crash. Again, in 1994, Soros bet that the US dollar would gain value against the Japanese yen, only to see the dollar weaken throughout the year, resulting in substantial losses. Despite these missteps, Soros has often been depicted as a powerful puppet master, capable of moving markets and even influencing governments. This image has been further fueled by his political activities. Over the past 2 decades, Soros has gained notoriety for his involvement in American and global politics, particularly through his Open Society Foundation, which has donated billions to progressive causes worldwide. Soros's influence has sparked a myriad of conspiracy theories, often steeped in anti-Semitism, accusing him of orchestrating everything from financial crises to mass migrations and color revolutions. While these claims are unfounded, they highlight the deep polarization surrounding his legacy. In 2023, at the age of 93, Soros passed the torch of his Open Society Foundation to his son Alexander, marking the end of an era. As Soros's influence wanes, the debate over his true impact, whether as a financial genius, a villain, or a visionary philanthropist, will likely continue. Yet one thing remains certain. George Soros is a figure who, through his financial acumen and controversial actions, has left a lasting mark on the global stage, shaping the world in ways few others have. If you enjoyed the video, leave a like and subscribe so you don't miss the next mysteries of the economic world. But what's your opinion? Share it in the comments.